Right, what if you could see exactly who is controlling the market so you can get that extra confirmation before you pull the trigger on your trade entries? Well, that's exactly what order flow gives you. And honestly, this felt like a cheat code when I first understood it. I stopped trying to predict reversals, I stopped forcing trades, and I stopped getting chopped up in the markets and started getting on the right side of momentum to actually ride the wave. But order flow is just a tool. And if you don't understand it and know how to use it properly, then it is just noise. So in this video, I'm going to show you the concepts you actually need to understand and how to use it so you can start getting on the right side of the market and winning more trades. Now, before we get into the concepts, it's really important to understand what order flow actually is, okay? So order flow is level 2 data that allows us to see orders that have been executed, okay? It allows us to see market orders that have been executed. Now, when we analyze this properly, and by the end of this video, you're going to know exactly how to do that, you will be able to see which traders are trapped offside and which traders are in control, which in turn, this gives you extra confirmation to build upon your trade ideas. But it's so important to understand that order flow is just another tool, okay? Yes, it's a cheat code. Yes, it's extremely powerful, but it's a tool and you need to understand how to use that tool correctly. But before we can analyze the order flow data, it's very important to understand the difference between market orders and limit orders. Okay, this is really, really crucial. Now, market orders are an aggressive order, okay, and they're a taker order, okay? They're lifting orders from the order book. With a market order, you hit buy or sell now, okay? You hit buy or sell now, and this will get you in at the best available price, all right? So your order will cross the spread to find willing buyers or sellers for the opposite side of your trade. Now, market orders are quite often used by smaller traders that are quite impatient, trading smaller size. And what market orders do is they move price, okay? Because they're constantly crossing the spread to pair those orders, that is what moves price up and down. But when we look at limit orders, all right, these are passive orders and they're maker orders. So they're orders that are going into the order book. They're orders to buy or sell either above or below price. And what's important to understand is they're used by larger, more patient traders, and they absorb the price. And when we analyze the order flow data, we can see exactly the difference between the market orders and the limit orders to understand who is in control of the market. Now, if we only had limit orders in the market, price would never move, okay? Price would move in a straight line if there was only orders to sell above the price, okay? And there's only orders to buy below the price, okay? But we know this is not the case. The market is an auction, okay? It's constantly moving up and down to fill orders to match buyers with sellers and match sellers with buyers. And that's because there's limit orders sells above price, limit order buys below price, and then there's market orders pushing between, all right? That is really important concept to understand. Now, one of the key things we analyze in order flow is delta, all right? And what delta is, it is the difference between market buy and market sell orders, all right? So quick introduction to delta. So positive delta or delta going up means that there's more market buy orders than market sell orders, okay? More market buy orders than market sell orders. And negative delta, okay, means there's more market sell orders than market buy orders. And I'll show you in a minute how it's really important to analyze this, because more market buyers doesn't necessarily mean bullish and mean price will go up. And the same with this negative delta. If there's more market sellers, it doesn't necessarily mean price goes down. And quite often it is actually quite the opposite. And we're going to look at that right now. And the concept we need to understand is called absorption. Okay, we can have bullish and bearish absorption, and this can be used to add confluence to our trade ideas. Okay, so what bullish absorption is, right? And we'll walk through this nice and slowly, and then we'll jump in the charts and look at the footprint. Bullish absorption is if negative delta, okay, delta is going down or delta is negative, yet price is staying flat or going up, meaning price, coming down, starting to put in a bottom and move higher, yet the delta is going down, okay, negative delta down here. What that means is if there's lots of market selling down here, so there's much more market selling than market buying, yet price is failing to push lower and it's actually starting to push higher, that can only mean one thing, okay? And what that means is there's passive limit buy orders absorbing those market sellers, okay? So we're seeing loads of market selling down here, much more market selling than buying, yet price is failing to go lower. In fact, it's starting to reverse. That tells us that there's limit buy orders absorbing that price, and that's bullish absorption. And when we pair that with our high probability trade locations and get on the right side of the market, this can tell us this is a really high probability location for the market to continue, because the big players, the limit orders, are filling their orders. They're getting filled with limit buyers, and we're seeing loads of negative sell delta. Okay, and it's the same on the inverse, so the bearish absorption. Okay, so delta is positive and going up, yet price is flat or starting to go down. Okay, so price pushing up, right, starting to go down, yet through here delta is very high, positive delta's pushing higher. That means there's lots of market buyers in here, yet they're failing to push price higher, which can mean only one thing. Okay, it can mean only one thing, that there's passive limit sellers absorbing that price. Okay, they're absorbing all of those market buyer orders, which can be a very, very strong sign that the market is going to continue. The big players have filled their orders. Now, it's super important to pair this with confluence, okay? Obviously, we see this absorption all over the chart, and we need to use it in context and location with our top-down analysis, and there's plenty of other videos on this channel on that, where we look for our trade locations. So what does this actually look like on the chart, and how do we use it? All right, so on the left, we have our price candle, okay? This is all the information you get on a price candle, okay? You have the open price, the close price, the high, and the low. You don't know how many market buyers and sellers were in this candle and at what point, okay? So if we have a bullish bias and we're looking for long trades from a location, we can use the footprint chart, which gives us much more information of actually what's happening inside that candle. So in this example, what I want you to look at is this candle here, right? It's exactly the same as this, but we've got loads more information. At every single price point within this candle, we can see the delta, okay? This is measuring the difference between market buyers and market sellers at each level within that candle. So down the bottom of this candle, if we're seeing loads of negative delta, meaning there's much more market sellers down here than market buyers, yet price still closed all the way back up here. What is that telling us? Okay, if this is all just negative market selling, yet price closes back up here, those market sellers must have sold to somebody. Okay, that's telling us that there's loads of passive big players, limit buy orders getting absorbed here. Those orders are getting filled. Okay, and then we can also view delta for the whole candle. So in this candle, we look at is negative 16.5 mil delta, yet it's a bullish close. Okay, the candle price traveled down here. Loads of selling, okay? All these sellers are trapped offside, and price closed all the way back up here. So the way we use this order flow data is when we already have a bias, okay? We've done our top-down analysis, we have a bias, we have a trade location we're looking for, and this example, this is the location, okay? We've got our long bias, we've worked through the system, we've worked through our process, we've identified this is a location we want to get involved if we see our entry trigger. So only if price comes in here and gives us a setup, this is where we look at our order flow data in this area here. And what we want to be seeing is loads of selling, okay, market selling against the momentum, right? So down here, we want to see loads of market sell orders, which is going to show up on the footprint chart as negative delta. And we want to see price close above that negative delta. Once price closes above that negative delta, that tells us that everybody below there that was selling is now trapped offside. Okay, it's either stop loss is getting triggered or it's new sellers entering the market. Either way, that's fuel for the move higher. Because if there's loads of market sellers here, okay, sell orders, price moves against them. When they close their trade, that's a buy order. Okay, closing a sell order turns into a buy order, which is fuel for the market to move higher. So this is the footprint chart, and this is where we view this order flow data. So we can see on the chart here, these are our price candles, but we've got much more information than we get with just a typical price candle, okay? We can see the delta within each level of that candle. We can see it represented with a colored bar, okay? The size and the color of the bar tells us the delta, but we can also see numerical figures, okay? Numbers that show us what that delta is inside, what that delta is inside the candle. And down below, we can also see delta for the whole candle as well as volume, okay? So down below, we can see the delta for the whole candle, in this example, is negative 4.1 million, and the total volume is 47.9 million. And we also have a visual representation here of a delta bar showing it's negative within that candle. So if we just think through this quite logically, okay, we see this candle and we want to imagine that this is the location we're interested in entering a trade. We're looking for an entry trigger here. We've done our analysis, right? What we want to see is loads of negative delta, and then we want to see price close above it, which is what we got, okay? Price wick down here, right? Then price closed all the way back up here. So everything in the bottom of this candle here, all this selling is now trapped offside, okay? And what we know is if there's loads of negative delta, meaning much, much more market sellers than buyers, yet price pushed higher, it can only mean one thing, okay? Must be loads of limit buy orders down here absorbing that price, okay? So the most important concept you need to understand is the difference between limit orders and market orders, okay? Really important to understand the concept of delta. Once you get a grasp of that, you'll easily be able to analyze these footprint charts and this order flow, and then you pair that with your top-down analysis, with your trading strategy. In the flow edge, okay, we look for our bias first, then we look for our trade frameworks, and then we look for our entry trigger. Now, order flow is a pretty complex topic if you're new to it, but stick with it because it's an incredibly powerful tool. Now, if you want to learn more about this, okay, like and subscribe, and also check out the links below to my free trading Discord because we cover heaps of order flow data, and you'll be able to see this executed in real time in the markets when I'm taking trades and breaking them down. So I hope you learned something. I know it's a lot to get your head around, but feel free to ask questions in the Discord, and I'll see you in the next video.